Money doesn't grow on trees, but it sure can disappear like magic. Discover the 24 ways your cash is vanishing into thin air. Are you spending your way into the poorhouse? Let's uncover the 24 money traps that are keeping you from wealth. Hey there, savers and spenders. Welcome back to Fun Financial Insights, where money talks are never boring. Today, we're diving into the wallet of wisdom and learning from none other than the money maestro himself, Dave Ramsey. Before we dive into Dave's thoughts, let's take a quick look at the man behind the money magic. Dave Ramsey is a man whose life story reads like a roller coaster of riches to rags and back again. Born in the heart of Tennessee, Dave Ramsey started with a bang in the real estate world, amassing a portfolio worth millions by the tender age of 26. But as fate would have it, the Competitive Equality Banking Act of 1987 turned his world upside down, leading to a personal bankruptcy that would change his life forever. Dave's philosophy is simple yet profound. Avoid debt like the plague, budget every dollar, and embrace the power of cash. Let's roll out the red carpet for our not-so-fabulous list, 24 things poor people waste their money on. All right, let's kick things off with everyone's favorite pipe dream, lottery tickets. Spending your hard-earned cash on lottery tickets is like throwing money down the drain. Sure, the allure of striking it rich overnight is tempting, but the odds of winning the lottery are slim to none. Instead of banking on a jackpot, why not invest that money in something like a guaranteed return, like a savings account or a retirement fund? We have another vice that can drain your bank account faster than you can say snake eyes: gambling. Whether it's a trip to a casino or a friendly poker game with friends, gambling is a surefire way to kiss your money goodbye. I know there's the thrill of the chase and the adrenaline rush of winning big, but the reality is that the house always wins in the end. Number 3 is Payday Loans. Meet Robert. He's got a busted water heater and an empty wallet. So he hops over to his friendly neighborhood payday lender and bam, he's got cash. But at what cost? For a $300 loan, Robert ends up paying over $105 in interest and fees after just a few rollovers. That's a 35% interest, folks. And if you annualize that, we're talking triple digits. Yikes. Dave Ramsey would have a field day with this one. And by field day, I mean he'd probably plow the field with the payday lender in it. But it's not just Robert. Many fall into this trap, and the data backs it up. The global payday loans market has valued at a whopping $4.8 billion in 2021, and it's only growing. But at what cost to the borrowers? When it comes to payday loans, Ramsey warns against them vehemently. He describes payday lenders as the bottom feeders of the financial industry, preying on those in desperate situations with the lure of quick cash. Ramsey advises building an emergency fund to avoid the need for such high-interest loans. Number 4, high-interest credit cards. Ramsey often emphasizes the importance of using a budget to keep track of spending and avoid the trap of high-interest debt. Using credit cards to finance your lifestyle is a recipe for disaster. With interest rates that can climb into the double digits, carrying a balance on your credit card can cost you thousands of dollars in the long run. Next up is everyone's favorite financial nuance: excessive bank fees. Dave Ramsey knows these sneaky charges can add up quickly and eat away at your hard-earned cash. Whether it's overdraft fees, ATM fees, or monthly maintenance fees, these charges can put a serious dent in your finances. What's the way out? Shop around for a bank that offers low or no fee accounts. Number 6, extended warranties. While extended warranties might offer peace of mind, the truth is that many products come with built-in warranties or are unlikely to break within the covered period. Sometimes they tend to come with many exclusions and often expire before they'll likely be used. Number 7, brand name products. Ramsey knows that while consumers often prefer brand name products, they may not always be the most economical choice. But you see, if you must buy a brand name product, he suggests using coupons to save money on name brand items, which can sometimes make them cheaper than generic alternatives. All right, let's talk about another money-wasting culprit that's all too easy to fall victim to: eating out too frequently. According to Dave Ramsey, dining out on a regular basis is one of the fastest ways to blow your budget. Sure, dining out can be convenient and enjoyable, but the cost of restaurants quickly adds up. Number 9, expensive coffee. While a daily latte might seem like a harmless indulgence, the costs can really add up over time. For coffee lovers, Ramsey points out the high cost of a daily coffee habit, especially when purchasing from expensive chains like Starbucks. You can switch by brewing coffee at home as a more budget-friendly alternative, which can lead to significant savings over time. Do you know what's smoking hot? Not your bank account when you're burning cash on cigarettes. The cost of a pack of cigarettes varies widely by state, but the average price is around $6.28. If you smoke a pack a day, that adds up to about $2,292 a year. Over 10 years, you're looking at almost $23,000, and that's not even accounting for potential medical costs due to smoking-related health issues. Dave says, invest in your health, not in tobacco. Every puff costs you pennies and adds up to a fortune over time. Before we go on, if you're enjoying this video and finding it helpful, please take a moment and hit the like button and subscribe to our channel. And number 11 is alcohol. Cutting back on alcohol can also pad your wallet. The average American spends $454 on alcohol annually. If you go out less or choose to drink at home, you could save a substantial amount of that. Plus, you avoid making impulse decisions under the influence, which can often lead to unexpected expenses. Speaking of impulse buys, did you know that the average consumer spends about $5,400 annually on spontaneous purchases? According to Dave Ramsey, giving into those spur-of-the-moment splurges can wreak havoc on your budget. So, before you swipe that credit card, take a moment to pause and ask yourself if it's really worth it. Let's discuss another financial pitfall that's hiding in plain sight: leasing cars. According to Dave Ramsey, leasing a car might seem like a good deal up front, but it can end up costing you big time in the long run. And number 14 is timeshares. Dave's not mincing words when he says timeshares are a pit of money despair. Why? Let's break it down. You're not buying a slice of paradise. You're buying into a slice of debt. And those maintenance fees, they only go way up. Emily thought she'd secured her family's vacation future. Instead, she got annual fees that soared higher than her kids on a trampoline. And when she tried to sell, let's just say that timeshares depreciate faster than a car leaving the lot. The timeshare industry is a $17.3 billion behemoth preying on vacation dreams. And getting out? It's like a maze with no exit. Just ask the thousands who've tried. Some have even paid companies to take their timeshares off their hands. Can you believe that? With 9.9 million U.S. households owning timeshares, there's a lesson to be learned. Be like Dave. If it sounds too good to be true, it probably is. Instead, invest in experiences, not contracts that bind you tighter than a straitjacket. So next time the timeshare spiel starts, remember Dave's advice. Run for the hills, not the sales pitch. Keep your vacations flexible and your finances in check. Number 15 is credit card cash advances. These can be costly due to high fees and interest rates. For example, a typical cash advance fee is 5% on the transaction amount. If you take out $1,000, that's an immediate $50 fee. Ramsey believes using your credit card to get cash is a surefire way to dig yourself into a deep hole of debt. Number 16, in-app purchases. It's easy to overlook small purchases within apps, but they add up. Users spend a staggering $380 billion on in-app purchases in 2023. Keeping track of these microtransactions can help keep your budget in check. Number 17, cable TV packages. You're paying every month, but when was the last time you lifted something other than the TV remote? Let's get real and cancel what we don't use. Cable TV packages in the age of streaming? Come on, people. It's time to cut the cord and save those bucks for something that grows like your emergency fund. Also, did you know 67% of gym members never actually use their membership? consider the average monthly cost is around $58. There's a lot of wasted dough. If you're part of that statistic, just canceling could save you nearly $700 annually. Next, let's talk a little bit about high-end electronics. Opting for quality, budget-friendly electronics over high-end ones can also be a smart move. For instance, a top-notch TV might set you back about $2,600, while a budget smart TV could be as low as $248. That's a difference of $2,352. Enough for a nice vacation, right? Single-use items like paper towels and bottled water are just throwing money away. Go green. Save green. Using reusable items instead of single-use ones can cut down on costs too, which means buying less frequently, which means more chances and money to save. Folks, let's get real about late payment fees. They're like tiny money gremlins nibbling away at your cash. Did you know that the average late fee for a credit card is about $301? That's a nice meal you're giving up just because you forgot the due date. Insurance. It's essential. But are you overinsured? Dave says get the coverage you need, but don't buy a parachute for a car ride. The key is shopping around. People save an average of $700 a year just by comparing rates. Now let's talk fast fashion. It's like fast food for your closet. Cheap and momentarily satisfying, but it'll cost you. Americans throw away 80 pounds of clothing per person per year. Buy quality over quantity, and your wallet and the planet will thank you. And number 24, expensive hobbies. Whether it's golf or gourmet cooking, hobbies are great until they're not. Dave believes if your hobby is hobbling your budget, it's time to scale back. Remember, moderation is key. You don't need the fanciest gear to enjoy your pastime. Set a budget for your hobbies and stick to it. Get creative with DIY projects or find affordable alternatives that still bring you joy. Remember, it's not about how much you spend, but how much you enjoy. There you have it, Dave Ramsey's guide to avoiding financial fumbles that keep you from thriving. We hope you're leaving with your pockets a little heavier and your spending habits a little wiser. Smash that like button if you enjoyed today's episode of Fun Financial Insights, and don't forget to subscribe for more life-changing financial advice. Until the next episode, remember, a penny saved is a penny earned.